Okay guys, welcome back to another video. So today we'll analyze Nifty and then talk about the futures ahead. Okay, so Nifty, if you look, there was a very good up move and then a very sharp down move again, right? So it's a type of inverted V shape. So is this a very good setup to buy? I would say no. Okay, you can look, see here that there was a range from November to December. Okay, from November, December 1 range. It came back to this level again. See, very fast it went up and then came back so fast. It was not able to sustain even this area. Okay, so what could be the possible reason? One, Fed meetings coming. Second, budget. Third, there was a Russia and Ukraine problem, right? There was something like that. So see, what I want to say is, what I've noticed is that whenever there is a Fed meeting, okay, then the market tend to react 10 days prior to that, or maybe like 5 days prior to that. Okay, Nifty tend to react like that when there's a Fed meeting. So what we can do is, suppose we're holding a positions, that is one again I want to say to you all. Suppose you're holding a positions and then there is a Fed meeting that's coming. Then if you see any type of red confirmation like this, like a type of bearish engulfing, okay, exit all your position. Okay, see, if your pattern is very good and if it is in an up move, okay, like if you have achieved 1:2 or 1:3 range and you want to still hold, that's fine. But suppose you are still not able to even get 1:1, okay, then this type of small retracement can make your stop go below your SL, stop loss. Okay, I'll explain about that later. So let's look, if is this a type of recovery that we can expect? Is this a type of reversal? Then the answer will be no, because this is clearly a type of profit booking. Profit booking, I would say, short covering for shorters, right? So it's a short covering. I can say that because people who have sold here, there has not been any sign of short covering here, right? They're selling, they're holding, and then today suddenly they bought. Okay, they have short cover. What could be the reason that they're short covering? Tomorrow is holiday, Fed meeting is tomorrow. Okay, so if the interest rate hike come, we may see some downfall. Okay, but if the Fed chairman come and say something positive, then the stock may give up rate in different way. Okay, if that happen, then the people who have shorted here will be in loss, right? So they don't want to take that risks. Okay, shorters, because they are now in a very good profit, right? Let's just assume, look here, getting 1:4, okay, 1:3, 1:4 is a very good profit, right? So why would they try to take more risks, okay, to get like suppose like this, like 1:2 again, right? So for that, they'll just recover and they're going to short it again, okay, if the Fed meet is not good. So it was a simple short covering here. Okay, and the futures ahead, we don't know. Okay, I'll be bullish when it goes above this area. Okay, this red candle, a type of inside candle. I will not literally say inside candle, but you can see a range here, right? 1 2 3, right? This area. So this area, breaking of this area, I'm gonna go bullish, or else it's still not a bullish, though it is in a very good support area. Okay, a trend support area, we can see. Okay, you can see, and if you look at excuse me, so if you look at this, even here it was in a very good support area. The volume is good. Okay, in Nifty futures, there is some volume coming in. So about bullishness, like I said, only after crossing 17,500 area. Okay, else it's going to be a type of range here. Okay, till Feb budget. Okay, after budget we may see some reaction, but before that we may see some type of 2-3 days, we may see some type of range, a small range. Okay, and about the theory that I explained, okay, why we should cover, let's look at some of the swing positions that I had. Okay, bell, I had bell right in a position. So you look at bell. Okay, look at this, my stop loss got hit, right? Let's compare Nifty. This was on 18th of Jan, right? This was on 18th of Jan. See, a red candle here. Okay, this is the day we should exit. Okay, this is the day we should exit, because most of the stock, when Nifty give a very big reaction, the stock may not try to like disagree with Nifty. they're going to follow in one way or the other, right? So when this happened, we should exit. But what I did, what I was expecting that this reaction is not big, okay, but the thing is that I forget to check that the Fed meeting is coming, okay, and I forget to check that there is a Russia and Ukraine conflict, okay, and I even didn't know about budget that's coming, okay. These are the things, and I was checking through, and I found out that every budget, before the budget happened or before Fed meeting, the market tend to react, okay, like 10 days prior to that or 5 days prior to that, they tend to react, okay. So a reaction has been done, okay. So after Fed meeting, nothing will happen, nothing much, okay, but before that it tend to react, okay. So here you can see a very good candle on 18th of, and this was an exit day, okay, and I was not even exiting this day, and I exited this area, okay. Mistake, you know, sometimes, because actually Friday was the day to exit, and I was like, okay, that's fine, it's going to bounce back. No, it didn't, and I had to carry more than my risks. Like, I carry only 1% of my risks, but here I carry 2%, yeah. And let's go to Tata Steel, okay. Tata Steel was a very bad entry, like I said. It was really a very bad entry. I bought it at retracement, okay, here without any confirmation, thinking that 15-minute was a confirmation, but that's not true, because I forget to look at Nifty structure, okay. When was this? On 21, okay, here 21, it was a type of doji, but it's not confirming, right? Nifty have to confirm, right, with my setup. So it did not confirm, and I bought it, and then boom, they see my stop loss. Because my stop loss is based on closing, okay. So I had to exit here. So a good lesson I learned here, that I need to like you know, put my stop loss like half quantity here, okay, this area. And most of the time at breakout stock, okay, most of the breakout stock never tend to touch this area, never tend to close below this green candle, okay. If it close below this, a small closing, it's a trend reversal. There is likely that it's going to reverse, because people who have bought here, okay, and who have missed and who are waiting for retracement, if they're not buying here, then they're not interested. Well, if they're buying at this level, then you can see some reaction, okay, a type of doji. See here, in here there was a type of reaction, right, but not confirmation, and then boom, due to market news. So this happened, and I was trying to hold, okay, like it was in a support area, I was trying to hold, but then Nifty sentiment was not very good, okay, so I did not hold. And if you look at Aditya Birla here, see, look here, there's a breakout stock, it gave me 1:1, so I'm holding. Like I said, if the stock give you 1:1 or above, then just hold, even if it retraces. But if it is below 1:1, then when Nifty retraces, then what happened, the stock is going to hit hard, so we need to get ready for that. Because if you're getting 1:1, the stock may not fall as much as the ones that are not giving 1:1, right? Because it's going to take time, it's not going to fall in one way directly, right? So you can see here a fall and a type of reaction. I did not exit this stock, okay, it was not even in a range yet. And then Caffeine Homes, it gave 5% today. So here, even this, I don't exit. Pattern breakout, this was a breakout candle, right? It came near here, okay, nearly hit my stop loss, open here, boom, okay. So these things I didn't hold, but the other two stocks I exited with loss of 4% of my capital. So it was not very good, and I learned something, a very good thing. Sometimes it's not only about technical, you know, we need to even look at sometimes some news, you know, some global news, not some like news that are meant to manipulate. But Fed meetings and all, people tend to react, okay, people tend to react. We can see it from the price, right? We see a type of reaction here. See, there was a signal, right, and we still tend to fail because we do not look at it properly. And other, I think today we got a very good pattern in Nifty in 15 minutes area. Actually, I was trying with this, you know, paper trading, and then this was a range, right, up here, and it was not able to cross this area. So in this area I shorted and went down, and I put my stop loss just here, and my stop loss got triggered with minimum risks, right? Minimum, I would say. And then after that, I went for SBI. SBI, what is SBI? Okay, SBI was a fantastic entry. I'll explain the logic behind. So this was yesterday's high, right? This was yesterday high, okay, high. And then after this breakout, what happened? I went for entry, okay. So here, stop loss is here, right? And I was able to get 1:3, okay. Wait, I was able to get 1:3. I think my stop loss was not. Wait, let me just zoom it for you. Did I do? No. I'm sorry. It's not about 1:2, 1:3. It was 1:2. Okay, 1:2. 1:2 was achieved. You can see here in my area for trading account history, right here. Okay, you can see here this was SBI closing position. Can we see, is it Nifty? Not this trading journal here, I guess. Yeah, SBI. See, order executed. So this was it, a very good pattern. Okay, we can all learn from this. Okay, and for intraday stocks on Thursday, I would go for Infosys. No, Infosys is good. If it goes below this area, Infosys, I'm looking a little bearish. Okay, 15 minutes candle. If it opens here and go and break this area, it's a clear sell opportunity in Infosys. Okay, if it gap down, then no. But if it come around here in this range, okay, and give a breakdown here, right, and it's going to be a sell in Infosys. So this is it, guys, and see you in another video. Thank you.